Coming up in this show, I'm going to bring you my comments on the markets. Ari has a sample for you of Future Speak. He's going to give you a great lesson in cycle analysis looking at Bitcoin. And you're going to be able to see our premium services for free in this preview. No credit card necessary, so don't miss this opportunity. You're going to see how you can get a view at our huge amount of content and analysis for you to use and review. And I'm going to give you my analysis of the S&P 500. We'll take a look at that market condition monitor as we look at the 1 to 3 month view of SPX.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market managed some modest gains in the last week, with investors still pouring money into those soaring AI stocks. Thus, it was another week in which the tech-heavy NASDAQ overperformed. The week started out to the upside as hopes that there would be a deal from the debt ceiling talks that would come during the week, but it succumbed to midweek when China reported very weak data. And the China market, well, stock market moved into a bear market with some 20% decline. And profit taking did come in those AI stocks in midweek, and that gave a little bit of a dip midweek. And I want to note, as we talk about China, we have been projecting a decline into this period and then a reversal coming. So we think China stocks are offering an opportunity. It was clear pretty much by early Thursday, that the House would pass the deal on the debt ceiling. And on Thursday, stocks took off to the upside based on that news. S&P 500 gained about 50, the NASDAQ 180 points. So it was a pretty strong day on that deal. And on the Senate also voted to pass that deal on Friday, and the stock stayed strong, moving up. And the mixed report on the employment numbers didn't really affect the market much. Now, the jobs created were almost double what was expected. It was 339 versus 190,000 new jobs. But the unemployment rate went up to 3.7%, and the wage pressure moderated. So the market actually took that all as a positive. Please just give me 1 minute for a political rant here, because I think this debt deal stinks. It suspends the debt ceiling till 2025, of course, past the next election. And that just means that there will be more debt, unlimited debt. They're talking about, well, going up some $4 trillion in these next couple of years, but they lifted this debt ceiling, so who knows how much spending there could be. And this debt negotiations, well, they didn't even look at 83% of the budget that remained untouched. Still massive spending, and it solves no problems. It only reduces spending over the next 10 years by 1.5 trillion. So that means spending will go up something like 10 trillion or more into 2033. And there is a projected deficit in that next 10 years that takes it over some $50 trillion. Entitlement programs, they're going broke and they remained untouched, and it's pure idiocy, and they have no plan for that. They avoided default, but they would have never defaulted because they have plenty of revenues coming in and they could have paid that. Does that make all of these negotiators heroes? I think not. They're just setting up the next period of chaos, and it could be a lot worse. Thank you for just that minute of letting me give my opinion. The stock market, well, the surge is about to change in nature. That upside move that we've seen in the AI stocks, uh, that craze that we've seen in here, led by NVIDIA, well, that's way overdone. They might be pricing in years and years worth of earnings, and some of them probably won't even have earnings benefit from that. But the fund managers, they had this fear of missing out, and they were pouring into these things. And when you look at a stock like NVIDIA and the huge increase in revenues, well, they were probably underinvested in a stock like that. But the stocks that got dragged up with it, there's many of them that are way overdone. Uh, I think that much of the rest of the market will look more appealing, especially to value investors. As we shared, our work shows a rotation is coming ahead in the market, and we probably see these weaker indexes and world markets setting bottoms. And our analysis has showed that, as we have actually shown for months on our S&P chart. And we think that the FCX and the EM and FEZ, those stocks 50 and the Dow and the Russell, I think they're going to begin to overperform. And you actually might see that beginning here on Friday, where we see that the NASDAQ stocks are actually lagging a strong rally in the market. That does set up a choppy period ahead where money flows out of the techs for a while and what have been beaten up stocks. So I really suggest that you look towards those stocks that are gaining relative strength. For the widely held, you can certainly see those in our market condition monitor and see how those turns up. And I'll give you a little look at that for the indexes in a few minutes. What that should look like is a weaker or stalling NASDAQ and maybe even the S&P 500 because of how much weighting there is in Microsoft and Apple. And starting soon, you should probably see that rotation beginning where the other indexes get stronger. But we don't think that the market is going to give a lot of ground to the downside. And again, I'll show you that I think there's a little weak period ahead coming, but it really sets up July and August as strong upside moves. And our target for the stock market, which was 4,300 on the S&P 500 this year, well, you can see it is quickly approaching that right now as we speak at 4,260. Our target range for the upside in here is 4,300 to 4,360 in the S&P 500. But I think that they're not going to get much. They're not going to have an easy time once they get into that level. And I don't think that there is going to be much, if any, upside past that. What I think is a target resistance range. Again, 4,300, 4,360 on the S&P 500. And I'm going to show you that in a few minutes. The stock market for the week, the NASDAQ actually has a slight lead over the other indexes. The S&P 500, Russell, Dow, slightly over 1% gains. The NASDAQ up about 1.33%, so they're really getting much more in line. And I do think the reversal in relative strength that we're talking about is happening, and it's happening now. Bond market 30's up about 2 points. We thought that the yields got way too high as they got up to 10 years at about 3.8%, but they dropped off 15 basis points this week. And we do see in the next couple of months the potential for the 10-year yields getting down to 3.2%. Gold gains about $14, but we see problems into late June for the gold market. Silver gains 33 cents. Same thing for that. We just don't think there's much upside right now. But the big upside that we see on the longer term, we think is September, October of this year. Might actually start in August. The dollar, well, that loses about 1/3%. And we think that it's seen the best of this rally. And as interest rates come down, as we believe they will, then what happens is the dollar is less appealing and money flows elsewhere. So we think that the dollar has seen its best of this rally. Oil, Well, small downside move on the week. We just see it really range bound, and you can see that in our Future Speak show every Wednesday. And if you become a premium services preview member, which I'm going to show you how to do that for absolutely free, you're going to be able to see Future Speak this week and next week on Wednesday. That'll be included in this free peek that we're going to give you over these next couple of weeks. So oil, we think it'll be range bound, and RV in Future Speak shows you that range. That is the opening comments for the week. I want you to make sure you go to askSlim.com and do explore. Get acquainted. Well, there's no better way than right now with the free Premium Services Preview. The PSP gives you a great look at just a ton of our content and services, and I'm going to show you how to sign up for that in a few minutes. On YouTube, please do subscribe to this channel, click the notification bell, and like this video. Give it a thumbs up. And on Twitter, follow us at askSlim. Questions that you have on the PSP or anything regarding our memberships and the huge offerings for education and analysis, you can write to Matt at askSlim.com. He'll be glad to give you any information that you would like. This is a preview of FutureSpeak. Arby's going to give you this sample. FutureSpeak, we look at 24 different futures and indexes, and that's for level 2 through 4 of our members, though it is free to you with the PSP Pop Premium Services preview that we're offering right now. So you should sign up for that, and you'll be able to see the full FutureSpeak show over the next couple of weeks. And now he's going to show you Bitcoin, and Bitcoin with what we think is a negative bias in here, and he'll show you why. This is just a great lesson. Arby, show him Bitcoin.
If we go ahead and move over to /BTC, let's pull up the weekly chart here. Same overall picture, also quite range bound, but we are now seeing quite high odds at this point that we have seen the high for this dominant cycle right there. So that is likely the high at 31,200, and we are now in an intermediate term corrective period with a low that's due 73 to 87. There is a 50 to the 61.8 from 25,322 to 23,957, and a 78.6 around 21,870. If we shift over to the daily chart, this is the daily cycle analysis in Bitcoin, and so far we only have a minor cycle breakdown right there versus that old low. What we want to see for this to get meaningfully more negative is for /BTC to lose 25,840. If so, we would be in a left-hand translation where the high forms early, and we would look for rallies to fail into this low, which is only due towards that middle part of July. Keep in mind that's approximately when we would look for a low to form in the NDX as well. So all of this would be syncing up to the downside. So if we lost that low, the overall shape of the move would be like that, and you look for rallies to fail quickly, and then for this market to likely be in a trend on the downside. That would be a far more interesting setup right here. Currently, we are just watching for a cycle high to form on this dominant cycle and a breakdown versus a key cycle low support. Okay, so that is what is in play here in Bitcoin. We should be watching for a break of 25,840.
Super work on that, Arby. Thanks. The askSlim Premium Services Preview is here. You can see our services, tons of our most popular services, absolutely for free. June 5th to June 16th is when we're going to have this open house, and this PSP will include our new Market Condition Monitor Premium, our Stock Index Daily Report, Intraday Live Chart Stream that has unbelievable live information for you for short-term traders on the indexes, the S&P 500 Multiple Time Frame Chart Stream, our trade ideas. You'll get our Future Speak show on Wednesday. You'll get our Slimulator for Bull Bear Rankings. The Slimulator Momentum Tracker, our ever expanding askSlim Discord community server where you have our analysts on there to help you and tons of discussions that go on, plus our cycle low timing tracker. Great information for those of you that are students of the cycle analysis. And you will get our futures, equities, and ETF hubs and more. This is unbelievable, free to you during this period. You could sign up right now, and this will be open to you to see June 5th to June 16th. There is no credit card required. All you have to do is sign up for this popular services preview, and you will just absolutely love it. Sign up at askSlim.com. You just have to click that sign up button. I'll show you really quickly where that is and what you have to do. Go to the askSlim website. Right up to the top of the page, you see that sign up green button up over there. Here is the front page. Just click on that right there. It's going to open up a screen for you, and you'll see that popular premium services preview is here, and everything that is in there. And yes, it is everything that is super popular, and you can see in here everything that is included with details right in there, and you can sign up right here. All you have to do is click the button up above, and there's this little video in here that gives you some explanation, and this is a great opportunity for you. Click here to claim it. It'll open up this little box right here, and you just sign up. There is no credit card necessary. Just put in your name and email address, and you will have this opportunity to see all of this great stuff here at askSlim.com. That is our premium services preview, our most popular services. You will absolutely love this. Free, absolutely free, no credit card. Sign up right now. Stock market, we're going to look at analysis and our projections on the S&P 500, but this is some important information. Please just take a moment and look at this slide, and it gives you some information about how we approach the markets and how that is important to you. This is the stock market review for the week. We're going to look at the 1 to 3 month view of the S&P 500. Now, the S&P 500 SPX has been very strong based on being pushed up by the AI stocks, as that index is heavily weighted by Apple and Microsoft, and so it's also benefited as the NASDAQ has done, so as they've moved up pretty sharply. We, in the beginning of the show, mentioned that we thought that the S&P 500 would continue to move up, as we have had an upside projection of 4,300 to 4,360 for this year, and it's quickly getting up to that level. In fact, it's just only 35 points from our minimal target there right now. So this has been following the intermediate patterns absolutely beautifully. During periods of very strong upside momentum conditions, often the pullbacks that we look for don't get down to our projections that we had, and that's happened recently because the upside move in the AI was so strong. It's prevented some of the deeper dips that we have expected. In fact, they have been much more shallow than what we thought were the highest odds. And our analysis was probabilistic, so we just simply mechanically look at what we think are the highest odds, and that's what we share with you. And that's what I did at the beginning of the year when I suggested that this would be a bull market year. Now, again, if you go back and watch my end of the year reviews, I talked about the S&P 500 and the stock market being in a bull market that is a cyclical bull market this year that lives within a secular bear market. That's a pretty bold call. Not many other people are out there making that call, and I still think that's the case, as the stock market has followed our intermediate patterns pretty brilliantly. Let's take a look here as we look at the S&P 500, and then we're going to follow that up by looking at the market condition monitor. So this is the S&P 500, looking at the weekly chart. And I want you to see in here in the bottom, if you're brand new, these are cycle brackets in here. And these just simply help us see the rhythms in the market. This cycle right over here was a little longer than this cycle right over here. There is a normal variance in the way these lengths of the cycles move, cycles measured from low to low, or trough to trough, as we say. And on our charts, which often look very busy to people that are not familiar with our style of analysis, we have a ton of information. We put in the supports, the resistances, the projections, and then what we do is we revise them based on what is the new data that we get all of the time. That previous slide that I asked you to read is all about the nature of our analysis, and you can continue to learn our analysis by becoming a member at askSlim.com. So if I just look at these last couple of cycles right in here, you can see what we're projecting in here is that this upside move continues here out into July or potentially into August. There are two different upside projections in here. This is the 4,300 upside projection, which is the major 61.8% upside retracement of the entire bear market. And this right over here is the target zone from the Fibonacci extensions that come off of this cycle right over here. So that's the 4,300 to 4,360 area that we were looking for as an upside target in the market. Now, I talked about in the beginning or earlier in the show that it was fairly likely that there would be some period in June that the market struggled a little bit. That is the minor cycle that we see right in here, in this area right there, where it's likely to have some kind of a pullback. But you see, we're only looking for a modest pullback in here. This is the 23.6% at around 4140, 4150. That's not much of a pullback, 100 points in the S&P. And if this gets higher in here, so will this target over here. Remember, we do this mechanically. Why do we have this pullback in here? Well, it's this minor cycle that you see right there. And these two cycle lines you see right there they're 3 bars either side of the ideal is what we look for. And that means that you could get a pullback here into mid-June, or you could get a pullback here into early July, and then beginning to move up again and towards our targets again. If you look at this mid-cycle low, as we call it, or minor cycle trough, the same thing happened right over here, where it was very strong, and then all of a sudden there was a few weeks that were hard on the downside. It hits the support zone, actually gave a couple of double hammers right over there, and then began to move up. You can see in here where the reversal scout, which is our momentum indicator on the weekly, turned down. And then once it resumed on the upside again, it was good. Then it corrected again. You can see in here when it turned up, it told us the market momentum was strong. And you can see in here, it through this whole period, even in these hanging men here on these candlesticks, it has not given any downside at all. That momentum has remained strong. That's in alignment with our intermediate projections. It's also in alignment with the fact that this pullback right in here may be quite shallow. Again, maybe only 4150 down to this area, and then beginning to move up again. This is into early July. This is into late July, early August, and even up here potentially in towards September. And then you can see this period over here. That's when both of these minor cycles and the dominant cycle are coming down. And those yellow areas are the periods of risk. You see January, April was one, and then you had that pullback right over there. If I look at this going back a little further on the chart, you can see in here that there was this period of risk last September, October, where we thought the market would come down sharply, and then it did there also. So those yellow areas where the big period of risk are, and that comes out over here in the typical September and even October area, where you could see the timing lines, cycle trough lines right there coming to the downside. So we don't see a lot of big risk in this market until we get out into late August through sometime in October. which is the typically weaker period for the stock market. So we're still looking for our 1 to 3 month view as the market having only minimal pullbacks, maybe 4150, and 4300, our target for the year, should be pretty easy in here, potentially up to that 4160 zone. Let's take a look at our market condition monitor. There's the market condition monitor right there, and I'm just going to move up here. We're looking at the intermediate view right over here. This trader dial is essentially this, you can either look at the time frames or the trader view. We're going to start out looking at the intermediate because that's what we just looked at. And you can see in here looking at the 4 indexes, the SPY, the QQQ, and the IWM. The SPY is very bullish, as is the QQQ, you can see SPY turned very bullish on May 17th. The QQQ turned very bullish on 5/31. The reason that was later was because the monthly pattern was negative, but now that has caught up and that turned to the upside. IWM now has just turned on the intermediate term slightly bullish, and the Dow remains slightly bearish. Let's just look here as we switch from the intermediate term to the short term, and you'll see how these things are really changing in here and how important this is. The IWM just went from neutral to bullish in here. As you can see, that's improving on the short term. You had an uptick here that just happened on June 1st in the Dow to neutral. These were the more negative ones. And of course, very bullish on the SPY since May 26th and May 25th on the QQQ. That's for the short term, and that's really looking at weekly, daily, and 2-hour charts is what that looks like, and our algorithms are built in there to give you those conditions. If I go to the near term, and that's as far in as we're going to go right now, you can see how these things have been changing in here as today on the June 2nd for the near-term traders, and this is for really 1 to 5 day swing traders, kind of a trader. You can see that the diamonds, the Dow has now turned bullish, the IWM has now turned bullish, and the SPY and QQQ are now very bullish. And I believe that you're going to see this QQQ start to lose ground. That's what we want to do, is to really get a sense for how that potentially is changing. So if you were a near-term trader, that's a short-term kind of swing trader, that's the kind of information that you would use. That's the market condition monitor on the trader version. If I go to time frames in here, you can see that what we're looking at is the reversal scout and the slim ribbon, and we're looking at the 2-hour chart right there. Let's just look at the daily, and you can see in here that this is the daily looking at the reversal scout and the slim ribbon, and you can see the Dow is still a laggard right in there. And when did the SPY turn bullish? Well, that was a reversal scout May 17th and the slim ribbon May 5th. This has been in bullish condition through this whole period. That's why we've been really bullish on top of the cyclical patterns that suggested that only the pullbacks would come and then the market would move up again. But this is why the pullbacks were so shallow in there in the SPY and the QQQ. And even the IWM has now turned far more positive. So the diamonds are the big laggards right now, and I think that potentially is going to change. Just a quick look here at the SPY. If I click on that, you can get all of the time frames right in there. This is just a remarkable tool that you can use, and you can see in here looking at the SPY going all the way down to the 3-minute chart. Look at that, all green. For every different style of trader, this has kept you on the long side. Just absolutely remarkable. This is a great tool, and you can have this tool absolutely for free if you just become a PSP member. Our askSlim Premium Service Preview is here. You can see the market condition monitor and all of our charts and just a huge amount of things that are on this list by just becoming a Popular Services Preview member. If you go to the top of the askSlim.com website, you can click the sign up button at the very top of the page. There's no credit card. You just put in your name and email address, and you're going to have access June 5th to June 16th to all of this amazing content. And if you click that sign up button, you go down there and you'll see all of the list of everything with descriptions of everything that you're going to get absolutely free. Why do we do this? Well, we want you to really see what we offer. We have this broad amount of content, which is really valuable to you. And there's no way to really know it without really seeing it. So we're going to just give you all this for free. You're going to get our Future Speak show for free for the next 2 weeks. All of this, just amazing. Please go click that sign up button on the askSlim page, and you will learn everything that is there and get a great peek of the amazing work that this team of analysts does. You have questions, write to Matt at askSlim.com, and he will be able to help you. Please go to our website and do that. Sign up for the PSP. On YouTube, subscribe to our channel, click the notification bell, and like this video. Give it a thumbs up, and watch the member videos in the playlists and past shows. On Twitter, follow us at askSlim. Any questions you have, write to Matt at askSlim.com. That's it for today. I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been